Why pay more for your precious metals from the big guys with offices on Wall Street and who bank with JP Morgan? From the basics like eagles, maples, rounds, and bars, to collector coins like the Silver Shield and Heroes SD War Collection, to our exclusive line of insurance-approved, TL-rated precious metal safes, SD Bullion has what you're looking for at the lowest prices, period. Guaranteed. Find out why over 15,000 new customers have recently made the switch to buying their gold and silver from the dock. Give our team an opportunity to earn your business today at SD Bullion. Why pay more?
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, joining us this week is a special guest and silver expert, Steve St. Angelo of the SRSRocco Report. It's great to have you back, Steve.
Yeah, Doc and Eric, we got bombs going off everywhere in the world, not only figuratively and also literally. We got bombs going off in China, and we got bombs going off in the big mining conglomerates such as Glencore and the shale oil industry. So it's a very explosive market.
Certainly has been an explosive market and explosive times. The second half of this week, we've seen the metals take another hit. Gold, we're recording this Thursday afternoon, gold looking like it wants to test that $1,000 level again, trading around 11.15 here this afternoon on Thursday. Silver trading back to around the 14.50 level where it's found support here on Thursday. So what's your take of the market, where we've been at second half of the summer and as we go into the fall again with everything such as Glencore and everything else going around, Steve?
Well, Doc, earlier on I paid more attention to the price, and now I pay more attention to the fundamentals. And if we understand that the markets are totally rigged, and that's not hype. I mean, we know Japan is buying stocks. We know China is buying stocks. Chinese government, U.S. is doing the same thing. So everything is rigged, and it also makes sense that the precious metals are as well. That being said, the precious metals, as they're trading with the algos and the high-frequency trading and the hedge funds, it's kind of trading basically on the price of oil. And so this price, the paper price, is kind of set, manipulated, but set on the back of the oil price. And as I've said before, going forward, the oil price won't matter what the actual value of silver and gold are. They will transform from a commodity price mechanism, which is how much is purchased, supply and demand, to a high-quality store value compared to all the paper assets that are really garbage out there, stocks, bonds. And so going forward, I think the physical buying, which continues to be strong in the retail market, as well as in India, I think at some point in time, if we start seeing more explosions in the overall markets, fall and into the winter, I think the paper price, the physical buying, may start to override that. It's not, but if it doesn't happen now, it will happen. I think it's going to happen within the next year or two. So getting in at these prices, I think, is one of the best investments for silver.
What's your take on the trading action here, Eric?
Well, it's always going to be defined by what the cartel is seeking to do with painting the tape, and we saw that earlier this week with a pretty aggressive takedown. And all of this is occurring at the same time that we're seeing amazing demand for silver, in particular out of India, and moving at a rate that's going to put us at over 10,000 ounces being demanded out of India just this year alone. So, if you step back and look at the bigger picture in silver, we've seen higher lows in the last three sets of lows, and it really does look like it's trying to move higher. But it's always an issue with the cartel, and we have this ongoing high premiums and tight supply in silver defining the trade, and I think that at some point the cartel will have to back up, and so we'll see higher prices. But time will tell when that happens. It should happen later this month, and in the coming couple of weeks, because we are in such a seasonally strong period for the purchases of both gold and silver. But we'll see.
And there's a couple of things I think we should discuss and point out as far as where premiums have been and things with the market. As we were just chatting before the show a little bit. Personally, from my viewpoint, I think the shortage is actually a little bit worse on the wholesale level right now than it is even on the retail level, if you can believe that, because all of the big boys, when they saw the first signs of shortage, they went out and they bought up every ounce they could, and we've seen it that even this week with really over the past 2 weeks. Last week we had the Perth Mint join the bullion market selling their Australian coins, and C&T, who has the exclusive rights in the U.S. for all of Perth Mint products, they sold out of every last coin in the first day, which is mind-blowing. And then we had the same thing with the America the Beautiful coin on Monday, with the U.S. Mint releasing that Monday morning with the Bombay Hook coin, and by about 9:05, they were completely sold out. So, I mean, we're talking a couple of minutes. Everything was sold out everywhere. Any new live silvers sold out instantly. And for what you're going to see happen over the next few months, one by one here, the official mints have been closing up shop and shutting things down for 2015. The Chinese mints shut down for the year now. The British Royal Mint has now shut down production on the Britannias. Banco de Mexico is no longer producing Libertads this year. And I believe the Austrian Mint is in their last run right now for the Philharmonics. And we probably only have about a month production left for the Royal Canadian Mint and U.S. Mint, if we're lucky. And all of the authorized wholesalers have already sold forward all of their coins for that period. So you're going to get a gap then between the 2015 coins and the 2016 coins, where there's nothing available on the wholesale market. I mean, unless you see silver jump up another maybe $3 to $5 an ounce, I really don't see premiums being able to weaken any further over the next month or two.
This is the first time this has ever happened, right? I mean, we've had production turndowns with the Mint to the U.S. Mint, and maybe the Canadian Mint will rotate thereafter, but all of these mints simultaneously. I mean,
and the thing is, the U.S. Mint has done that before, but the authorized purchasers hadn't already sold forward 2 months of production in front of that. So basically what that means is over the next 2 months, there's not going to be any further coins for the retailers to acquire and stack up, so they're not going to already be sitting on a stash. Like, the authorized purchasers are not going to already be sitting on coins, so when the Mint shut down sales for 6 weeks, if you're a retailer, you can call up and buy 5,000 coins because the authorized purchaser is still sitting on 300,000 coins that they've stacked up from before the Mint shut down.
I mean, this is setting up a scenario that's worse than 2008, 2009.
Yeah, Doc and Eric, I totally agree. I'm glad you brought that up because there's a lot of, you see some chatter on the internet, some people leaving comments, and they'll say, well, I have no problem getting silver on eBay. I can go to ATMEX and I can buy silver eagles with no wait or very little wait time. So I don't know why you guys are, so hyping up this silver shortage. Well, you see, that's exactly the issue. The retailers have stocked up, and so they do have stock. Now, some retailers have sold out of their silver eagles. And other retailers, like ATMEX, they are one of the authorized dealers, so they buy directly from the U.S. Mint. Other dealers have sold forward a lot of their silver eagle sales, so that when they get their allotment next week, they have to give it to the customers that purchased it. So the shortages don't happen in all products and in the entire market. What we're having is bulges in different areas and in different retailers. And the problem is, as you said, what happens if we start seeing more problems in the market and we have more buying of this other official silver coins like the Kangaroos, the Britannias, or other, let's say, rounds? If they start buying, we start seeing more big buying over in October. It could actually deplete a lot of the retailers who have it stocked up. They could go through a lot more inventory in October and the beginning of November, and there'll be a lot less silver because the wholesalers will not have that silver to sell. And what's also interesting, what people need to realize, and kind of looking at all the data and putting it together, 2008, we had the big big shortage. I think premiums, they were almost double. If it was $8-9 for silver, you were paying $6-7 premiums for silver eagles. The difference was in June of 2008, the U.S. Mint sold 1.2 million silver eagles. In July of 2008, they sold 1.2 million ounces of silver eagles, and in August, 1.8, and September, 1.8. So in 2008, in those 4 months, the U.S. Mint sold 6.1 million ounces. This year, they've sold 18.8 million, and we still have a shortage. So what investors who look at these little, I can get silver here, I can go to my coin dealer, and I can find a couple of junk coins here, what they don't realize is that the Sunshine Mint has ramped up production 3 times what it was in 2008. So have other mints. So the market is now absorbing 3 times the amount of physical silver investment demand, and there's still shortages. So I think this is the game changer, and investors realize the reason why we're seeing such high buying is because they know the problems haven't been solved with the Federal Reserve and the banks and the economy. Nothing's been solved, so that's why we continue to see strong buying.
One of your recent articles, you were talking about how in the next downturn that it's going to be different in the precious metals markets, and I'd love to have you talk a bit about that because I think our readers and listeners would find that interesting.
And when you say in the next downturn, would you elaborate on that?
Well, in the next investment crisis, when people are flocking to the safe haven of non-counterparty risk encumbered gold and silver. So
okay,
2008,
right.
2009, take 2.
Right. Yeah. I was talking to you all before you were chatting before, and you see what is so different. And I went back and looked at some data. Investors, when the U.S. Treasury stopped issuing silver coinage in the 60s, investors or Americans just swallowed it. They just hoarded it because they knew it was a good deal. Well, in 1971 to 1978, a lot of that silver that investors had acquired, they dumped into the market. There was actually a deficit for those 8 years, about a 415 million ounce deficit, but it was supplemented by all these old coins, let's say junk silver, that was put into the market, and it was like 620 million ounces. So even though the price of silver increased from about $1.50 in 1971 to about over $5 in 1978, it was done because of the Hunts and other large institutions coming in and buying, as well as the oil price had skyrocketed. So it was an inflation hedge. Well, the public did not start buying silver until 79 and 80, and they got in towards the top, which is what they normally do. And so they came in, started buying a lot of silver in 79 and 80, and then the price fell in 80 and 81, in the beginning of 82. Well, what happened was several forces and things that happened in the market, and also there was an international financial market panic that happened in 1972. So the price of silver in June of that year was like $4.98. It had fallen from $50 or $49 in 1980 all the way down to $5, the middle of 1982. So investors started buying silver, and they bought it until the beginning of 83, and the price jumped almost up to $15. So we only had real public buying for a couple of years, maybe a year and a half, 2 times, 79, 80, and then 82 to 83. Well, as the price of silver declined and kind of stagnated for 2 decades, there was not much going on. Now, the difference now, which is I see a whole different market, since 2008, when the financial system died in the United States, and the investment banking system did die, Lehman Brothers, Bear Stearns, they all went under. What happened was we started seeing huge investment demand in silver. So from 2008 to 2011, the price of silver increased from about $9 up to $50 in 2011. The market purchased about 630 million ounces of silver bar and coin. Now, what is more interesting than that, as the price peaked and declined from 2012 to 2015, investors are actually going to be purchasing more silver, almost 820 million ounces. So this time around, we are seeing so much demand, and the drawdown of these exchanges on the COMEX. What's happening is we're getting so much demand in India, they're putting a pinch on supply. And we're getting so much investment demand as industrial demand is falling. It's putting so much stress on the system that going forward, when we have the next financial crisis, there just won't be the silver this time. I think the market has run through a lot of what is known as the unreported above ground stocks. I think we have run through a lot of that. And just in the last 10 years, I went over and looked at the deficit. If you add up all the annual deficits of silver supply and demand, it's almost 1 billion ounces. So we have been going through this unreported above ground stocks, and now that we see the COMEX registered inventories falling, I think we're getting now to the basement. We're starting to get to the bottom, and one big black swan will just totally destroy the ability for investors to purchase silver. And so I think we're very close to an epic, once in a lifetime wholesale shortage of silver. It's never happened before. But when it gets into the wholesale market, Doc and Eric, investors will not be able to get silver unless at much higher prices.
Yeah, I certainly agree that we're one black swan away. I mean, we might even not be at that. We might be only $1 or $2 downside in silver away. I personally think that if gold retests 1070 and then retest that $1,000 level and take silver back to a 13 handle or lower, you might see that even then, because I mean we're already at the point where the authorized dealers and the largest wholesalers in the country have no silver to sell. I mean, A-Mark was selling only 3 products last week, all about 4 to 6 weeks out. And I mean, I'm talking to these guys every day. They're literally their entire corporate structure are in like meetings all day about what they're going to do to come up with physical silver because they don't have any. They can't find any. They got 20 warehouses that are typically full of metal and they're all bone dry empty.
Let me just interject. I agree. And what's happening is, this huge demand in silver that's taking place since 2008, and it's actually picked up speed as the price is falling, which is different than in the 1980s and 82, 83 period. They were only buying on the way up, and I think it's because it's been manipulated. India hasn't imported much silver from the United States, and I had an article about the stunning development in the U.S. market, and I looked from June 2014 all the way to April, and their imports are in tenths of a metric ton. 1 month it might have been 1/10 of a metric ton, and in another month it might be 2/10 of a metric ton, or none. Now in May it ballooned to 39 metric tons, and in June it's 75. Now this is occurring right at the time that Greek exit situation, and then we had the huge buying in July where the U.S. Mint actually stopped selling silver eagles. They put it on. They actually stopped selling, and so I haven't seen the data for the U.S. data for July, August, and September, but my assumption is that we're exporting more silver to India. So people need to realize that in 2014, the United States and India imported 44% of global mine supply. It looks like this year that will be 63%. I mean, that is such a crunch on overall supply. And China isn't really importing that much more. They're actually holding on to all their mine supply, but they're importing about 10% more. And what's interesting, Asians tend to purchase more gold, where North America and Europeans, well, let's say North America, are purchasing more silver. And so that's kind of India's different. But let's say Asia, Indonesia, Singapore, they're purchasing more gold, where India and the United States and Canada are purchasing more silver. So it is just amazing how much more silver demand, and it's investment demand. Industrial demand is falling. So we are seeing a huge reduction in actual exchange inventories because of this investment demand.
I wanted to, before I forget, I wanted to give the listeners a quick bit of inside. There's been a lot of market rumors second half of this year here that there's going to be a new Silver Eagle design for 2016. 2016 will mark the 30th anniversary, and there's actually a congressional mandate that the U.S. Mint honor the Silver Eagle program on its 30th anniversary. There's been a lot of rumors and speculation that the Mint's going to come out with a brand new Silver Eagle design for the first time in history. 30 years, the same design. And I mean, that's just what this market needs right now, is a brand new design for Silver Eagles, right, guys?
Yeah.
So
maybe they should just offer the ability to sell them and have it in inventory. I mean, that would honor the program.
But we had one of the VPs at one of the authorized purchasers today. I had him give the U.S. Mint official a call today, and so the word from the U.S. Mint is currently they plan to only have a design change on the rim of the 2016 proof Silver Eagles. Is how they're going to try to get around, comply with the congressional mandate, but not actually have to come up with a new design. They didn't out guarantee there's not going to be a new BU design, but they said, I think the direct quote was, we don't currently have plans to release a new design on the bullion BU coins. So they're going to try to get around that mandate by just having something commemorating the 2016 as the 30th anniversary of the program on the rim of the proof Silver Eagle coins.
Yeah, that would be a real mess if they had a whole new design, because of course investors want to get the new 2016 if it was designed, and they can't even meet demand now, and that would really throw things over the top.
And knowing the U.S. Mint, if they came out with a new design, it'd probably be October of next year before they had everything rolling and ready to go. That's what happened with in 2010 when they launched the ATB program. I think it was about October of the year before they finally released the first coins, because it took them 10 months to get the presses ready to go.
Yeah, what is interesting too, and I spoke to you before about this, Doc. These official figures that I look at and other investors look at on the silver coin and bar demand, it does not include silver rounds. It's official coins and bars. Now, I've contacted the GFMS, and unfortunately, the head, Andrew Leland, who is the head senior analyst for GFMS, he's no longer there. He actually left in September. So I've had some email exchanges with him, and I know he would have answered that question for me. What are the bar requirements? Is this 100-ounce bars? Is it just 1,000-ounce bars? What is the bar investment demand that they are using?
I mean, a lot of the private mints, they don't. It's not like they're melting down 1,000-ounce bars to make rounds or 10-ounce bars. They're melting down a silver shot.
Yeah, I hear it's both ways, and I'd like to know if the rounds to me are a big number, because as you know, there's a lot of rounds being sold. Not only because of they can get them cheaper, you can actually get them more available than the official coins that are being backed up now 6-8 weeks, and also you can get smaller denomination. If you can't get junk silver. Or if you do, you're going to pay an arm, a leg, and a foot for it. So I see these walking liberties. There's 1/10 ounce, there's half ounce, and there's quarter ounce. I think that's a great way to go. But so there's a lot of rounds that are being produced that are not even included in this official data. And I was talking to you about it, Doc. I was thinking it could easily be 5-10 million ounces in North America, in the United States, but it could be more. So I'm trying to contact some of the mints to see if they would at least give me an idea so we can get a ballpark figure. Because the U.S. Mint produced, I think it was 44 million ounces of Silver Eagles, proofs and everything else. But how many private rounds were produced last year, and then how many are being produced this year? So the number could be significant.
And I think as I replied to you in your email inquiry, Steve, if you extrapolate our numbers from what we see in sales at SD Bullion, you'd be looking at about 20 to 25 million ounces in round sales.
Yeah, now that would be a lot.
And it's probably low, honestly, because, I mean, we're still a pretty small bullion dealer comparatively. A lot of the dealers have hundreds of options for 1 ounce rounds, where we might have 10 or 15 offered.
Yeah, and I do think the rounds, even if it was 10 million, that's almost 25% more than the official coin calculation for GFMS for the United States. And if it's even more than that, if it's 20 million, that's a lot of silver that's going into the market. And do you know what that would do? That would make the deficits actually even worse, because they're actually underreporting investment demand. And as I stated, since 2008, the biggest market that has the biggest increase in overall, let's say, percentage in market share has been coin and bar investment demand. It's increased like 250%, whereas silverware is flat, jewelry is up like a few percent, and industrial is down. So again, we are in an 8-year buying spree of silver investment demand. 8 years. Some years have been a little bit lower. Some years have been higher. I think the high was 244 million ounces in 2013. Dropped a little bit in 2014. I think this might be a record year again. But it hasn't let up. And again, the reason why silver buying, investment buying, hasn't let up, because nothing's changed in the financial system. It's worse off than ever. You know, as I mentioned in the beginning of the interview, there's a lot of things happening, a lot of explosions going off in companies, and unfortunately, China, we're starting to see very strange things happening. I mean, look at China lost 100,000 coal jobs, and that's a big number. And in the United States, the U.S. dollar is basically the reserve currency, and the U.S. dollar has power because it controls the oil of the world, and it does that through its military and arm twisting. And if you don't comply, then the country gets overturned, and the dictator gets taken out. And so that's how we keep the dollar being a world reserve currency, by controlling the oil market. Well, we had a bit of a reprieve because U.S. oil production has really skyrocketed since 2010. It hit a record 9.6 million barrels a day. Well, in just the last 5 months, it's down 500,000 barrels. And I think we're going to see continued falling of U.S. oil production. We may see a collapse, and that's due to the shale oil industry. It's a mess. And for example, you hear a lot about the junk debt in the U.S. Shale industry, and there's a lot of junk debt out there. Well, Goodrich Petroleum, their investors agreed to take 47 cents on the dollar for exchange for stock warrants and some other notes. Now, those were the lucky investors. The investors that didn't get into that, they're getting 18 cents on the dollar for their bonds. It just goes on and on. Another company called Helcon, they paid 65 cents on the dollar for their $1.5 billion in company debt. Yeah, this is just the beginning. So we're going to see these companies that were basically fly by the night, going into the back end in North Dakota, the Eagle Ford in Texas, and other smaller shale oil fields, and they were producing this stuff as fast as they could, and they weren't making any money. All they're doing is adding more debt. So when this implodes, I think we're going to see a collapse of U.S. oil production. And we may start to see that into the end of 2015 and in the beginning of 2016. But as I said, Doc, on several interviews and several articles, according to the folks I look at, we're going to see a 33% or more decline of U.S. oil production by 2020 and 60 to 70% by 2025. And the U.S. will not be able to really import a lot of oil, I think, because the dollar will be toast by then. So gold and silver will be, especially silver, the go-to stores of value, because most paper and physical assets, and I'm repeating myself again, because most paper and physical assets will lose value due to the peak and decline of U.S. oil production first, and then global oil production second. And so, again, I don't know any other better assets to own, especially now with the price of silver at $14, $15. I see tremendous value in both precious metals going forward.
All right. It'll be certainly be interesting to see how the renewed commodities crisis with Glencore unfolds, and whether Glencore does in fact go under. John Butler tweeted this week that if Glencore goes under, it'll, I'm trying to remember his exact quote, but it'll be a lot worse than MF Global back in 2011 and all everything that happened in the wake of MF Global, which was pretty significant crisis in the commodities market.
Oh, let me say this before we complete the interview. Interesting, the registered silver inventories, we had another, it's been coming mostly off of the CNT depository, the registered, that's where it's been declining mostly. But we had a 718,000 ounce transfer from Brink's registered to eligible yesterday. And then there was a 1.2 million ounce withdrawal out of the CNT depository yesterday. Today, I just checked, there was another 795,000 ounce transfer of registered silver out of the CNT depository until they're eligible. And I think there was another million ounce withdrawal out of the COMEX eligible. So we're at 43.7 million ounces on the registered, which it continues to fall. And the overall total inventories are at 164. But to me, the registered are the ones really to focus on. So to see another 1.5 million ounces taken or transferred out of the registered, which are available silver to the market, in just the last 2 days, it just goes to show you there's more where we continue to see these registered silver inventories continue to fall. So it's just more stress on the market.
And to put that in context, if my memory serves, Steve, the low we saw in the wake of the big financial crisis several years back was about 28 million ounces. Am I right?
Right, with 15 million ounces away from that.
And what was the level that it got up to at its recent highs?
70.5 million, and that was April this year. It took 4 years to get it that high. And let me quickly, before we go, I've got one more chart here. During the decline, a big decline from when the price of silver skyrocketed from $19 in 2010 to $49 in 2011. We saw that decline of the registered inventories. It went from 56 million down to about 27, 28, like you said. That was a monthly decline rate of less than 2 million ounces a month. It was like 1.8. Well, from April this year to September, it's fallen from, now it's October, from 70.5 million down to 43.5 million. It's over 4 million ounces a month. It's double that rate. It's falling so much faster than it was when the price of silver skyrocketed from $19 or $17 to $49. So, and now we add these two larger withdrawals, or let's say transfers, out of the registered. It's just amazing to see the registered fall this much and this fast at such a high rate. So I just wanted to also include that.
All right. Before we wrap up the show, if you can let the listeners know about your private subscription report that they can find on SRSRocco.
All right, Doc. If anybody wants to come check out the site, it's the SRSRoccoReport.com website. I put out 2 or 3 articles a week, either on silver and gold, mining, supply and demand, and I talk about energy too. But I do have a silver chart report that's 58 pages long, and it's got 48 charts in it on the silver market and industry. There's no other report in the internet or in industry that I know of that covers the market in this report. So I'd love to have anybody come over and check out the site, and it's been a great time chatting with you both.
Yeah, we highly recommend it. Definitely some of the best in silver analysis in the industry. So keep up the good work, Steve.
Thanks, Doc.
All right, we'll wrap up this week's show here. So for the Doc, Eric Dubin, and SRSRocco himself, thanks for tuning in to this week's SD Weekly Metals and Markets.